Greetings and good morning, Dr. Jeffrey Scott. Welcome to my weekend market recap, 15th October 2023. I am Sagar Nandi, retired IT professional, swing trading stocks in the USA as well as India markets using the Q systems and the associated techniques that I developed over the years. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. I tend to share trade analysis or trading ideas where the technical strengths are combined with market level direction, sector industry strength, and fundamental strength. Sometimes I look at seasonality also. Because I try to combine all these forces with my trades, they tend to be truly high probability trades. And proof of the pudding is in eating, so I not only share the ideas, whether they make profit or loss, I often go back and review them, how they played out. I will do the same this week as well. Disclaimer, this demonstration is for educational purposes only. I'll not only review earlier trades and see how they played out, I may also share some new trade ideas today, but they are for educational purposes only. I'm not an investment advisor, it is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. I trade them in a way that does not use the risk or leverage involved in the options trading. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems and only Q systems for my trading. When I'm trading in the USA, I can carry out the technical analysis on TradeStation or Metastock, and the rest of the analysis, that is sector industry rotation analysis, fundamental analysis, seasonality analysis, those are available on Metastock platform for the USA as well as global markets. That was the last slide. Let's continue with a look at the live systems, and as I mentioned, I'll look back on my previous week's comments. When I looked at dollar index, and now this is not dollar index but the equivalent chart of dollar index ETF UUP, I mentioned that if that turns into a downtrend, before that it would have to break a trend line support that was there, then that may be good for the market. That might be good for the market. Now we can see the trend line support is broken, but it is still having higher high, higher low. That may change if next week UUP turns down. Then we'll have a lower high, and you may say this is a lower low. That will certainly be, well, certainty is not there in the market. That is more likely to be bullish for the market. Right now UUP is indecisive. Whenever we see two candles side by side, like here in the weekly chart, with tails in the opposite direction, so one long upper tail, then one long lower tail, taken together they look like something like this. Taken together, the two weekly candles actually look like this. A two weekly candle with small body and long upper and lower tail, that is a doji like candle. This is an indecision over 2 weeks. So we have an indecision over 2 weeks. We may wait to see where it is going, and we will be clearer about it if price goes down next week. Then we'll have a lower high, lower low. If it goes up, we'll have to wait for clearer direction, or let me say a clearer setup. Right now we don't have any buy or short setup. Where will it go? I don't like to anticipate, but I am more happy if it goes down, because many stocks are at a lucrative buy point. They are undervalued stocks or high growth stocks. They have fallen a lot. I'll be happy to buy them, but I like to have some proper signal from the market level. That is, my preferred trading direction has to turn bullish. It has not turned bullish yet. I am very hopeful that if UUP turns down next week, my preferred trading direction will turn bullish. Now, before I continue, let me look at the two stocks ideas that I analyzed in the previous market recap. For the USA market, these were two stocks. Netflix was one. I'm not going to look at its seasonality now, but in the last market recap, when we were at this point on this candle, I noticed that Netflix had a bullish seasonality in this month of October, 70% bullish seasonality. So I mentioned that if we had a proper long setup in Netflix using Q setups, then I would not mind buying it, using the seasonality also in my favor. But as we can see, we did not have any buy setup. The weekly candle continued to be in bearish color. Most of the Q trade setups don't allow us to take a trade when the weekly is in bearish color. That is not doesn't allow us to take a bullish trade when the weekly is in bearish color, except bounce setup that does not rely on weekly color. We didn't have any bounce setup because there is no trend line support. Therefore, we did not have any long setup, but I am happy to keep an eye on it. If it gives me a trade setup next week in the long direction, I'll be happy to take it because seasonality is in favor. But seasonality, as you can see, alone is not enough for me to take the trade. I have to have a proper Q trade setup in the long direction that we did not have so far. So I was watching Netflix from last week's market analysis, did not find any trade setup, did not trade. The only other stock, and both were in the bullish direction, that I analyzed, that was Microchip, a semiconductor industry stock. And the reason for me to choose this stock was that it broke out of this trendline resistance right on last Friday, giving me a breakout long setup. That was my basis of analyzing the trade or taking the trade. Now let me explain how I manage the trade. First, or even before that, how I entered the trade. It was a bullish decision, that was clear. The next decision I had to make was the choice of instrument. I could trade it using stocks, but this was a breakout from a downtrend. Price was going down with lower high, lower low, and then it was breaking out. When I have a bullish setup in a stock in a downtrend, as I have mentioned earlier, my preferred instrument is not buying stocks but to use verticals, options verticals, short put vertical or long call vertical. Because the market view was not that bullish, short put vertical would be preferred because time decay would be in my favor. On Monday, Tuesday and Wednesday, price went up. Monday, Tuesday and Wednesday, price went up, and the color, that is traffic light candle color, momentum color, remained bullish. On Thursday, it turned neutral, and on Thursday, I closed the trade. Now, this is a good point to explain under what conditions, using Q guidelines, I may close a trade. One is that there are three situations actually to close a trade following discipline. One is if I am long in a trade and it goes up and hits my profit target. Other is if I am long in a trade and it goes down and hit my stop. And there is a third situation, and that third situation was applicable here. Why so? Because it did not go up enough to cover my risk distance for me to close the trade with profit. It did not go down enough, didn't go down actually, never went to the stop level, so I would not exit with a stop. So the third situation was applicable here. What is the third situation under which I exit a trade? That is if my market view changes. So on Thursday, my market view changed to bearish. Is it something that I am just making out now because the stock fell down? It could be, but it isn't like that, because on Thursday on X, as I often do, I shared some live analysis. These happen to explain why my market view changed to bearish on Thursday. I made a series of tweets on Thursday, and as you can see, the first tweet was at around 1 p.m. Eastern Standard Time. I was looking at QH sector industry stock advanced decline breadth, a beautiful piece of insight that showed me in real time on Thursday 1 p.m. that 100% of sectors were down, 90% industries were down, 81% stocks were down after the market being bullish quite a while, and prior to that, over 1 month period, market was bearish. So what did I say in the tweet? And remember, why I review this is not only for the benefit of others, also to gain more and more and more confidence in my own mind, so that next time I can apply the same methodology. What did I say? Q edges breadth inside is calculated in real time. Okay. Today's breadth suddenly turned bearish, and longer term breadth, 1 month breadth, is also bearish. In the middle, it was bullish, which could be read as a recovery attempt in a downtrend. That is enough reason to be cautious with long positions, and there are other key insights too for such caution. So this was my first tweet, and I always say, if I am trading in the market, I like to take my trades first before sharing all the insights, to be honest, because I am not providing any stock tip service. It's just to help others using the live systems that I use myself. So this is my first tweet. Probably I would have closed my long positions before I started this series of tweets. So by midday Thursday, all my long positions were closed. Microchip was one. I had a small profit in Microchip. Let's look at the next tweet on the same day. So I'm making a series of tweets one after another on Thursday. Here I'm seeing Q Elites, that's on TradeStation, real-time chart shows the small cap, that is index RUT, Russell 2000, breadth was bearish from the morning, that is here. Breadth meanings advanced decline breadth and up down breadth. That was very negative from the morning. And 2 and 3, NDX and SPX breadth turned bearish now. That is NDX advanced decline, Nasdaq 100, and up down volume turned bearish when I tweeted it. Prior to that, they were either flip-flopping or were bullish, but they just turned bearish when I tweeted it. Same was true for SPX, S&P 500 breadth. Advanced decline was down, up down volume was down then up, and when I tweeted it, both of them turned bearish. Only DJI, that is Dow Jones Industrials Index, was still positive for up down volume only. Here, up down volume, advanced decline was already negative. So I'm looking at all these on different monitors at the same time. And I commented looking at the market turning bearish from Q edge and also from this breadth insights, that DJI up down volume may also turn negative before the close, which happened in fact later. Q will show the updates in real time. Second tweet. What about the third tweet? On another monitor, I am looking at Q Global's market percentage change real time chart. All these are real time analytics. And what am I seeing and showing? Real time Q market percentage chart shows RUT, that is Russell 2000 index, or IWM, was negative right from the morning. This is Russell 2000 negative right from the morning. Mega caps were holding some parts of the market higher. NDX is heavily influenced, that is QQQ is heavily influenced by mega caps. So is SPX or SPY. NDX is most influenced. This NDX was positive for a long time as the mega caps were also up for a long time. And at the right edge, when I am sharing the tweet, mega caps fell sharply, brought down NDX with it sharply. SPX, this color, cyan color, was down, up, up. It also fell down sharply. So when I tweeted this chart, all the components of the market, whether S&P 500, Dow Jones Industrials, S&P 1500, Russell 2000, Nasdaq 100, mega cap, everything turned down, and we can clearly see that only thing that was holding the market since morning up, holding the market since morning, was mega caps. This is very useful for me in futures or futures trading if I do, or maybe day trading options. I in fact shorted QQQ using put options right when I saw that mega cap was falling down. That was likely to pull QQQ also down using this chart. And what did I comment further? Long position holders may be cautious. I was already out of all my long positions, and short traders may look for low risk entry opportunities. I shorted QQQ for day trading options, had a significant profit by the close of the day. In any case, let's look at the last tweet and explain how my market view turned bearish on Thursday. This is again Q Edge real-time analytics. I'm seeing and showing that yesterday's, that is Thursday's, this is Thursday. So Wednesday's breadth was bullish. Today's is bearish, that is Thursday's is bearish. As of this post, 11 sectors of 11 were down, and here I am seeing huge 18% of stocks. So one day earlier, 50% of the stocks were below mid Bollinger Band. As of this tweet time, precisely what time? 1:46 p.m. Eastern Standard Time. From 50%, it became 68%. So a huge 18% more stocks fell below the mid Bollinger Band compared to yesterday, turning bearish. And percentage of stocks below lower Bollinger Band jumped from 1.7% previous day to 13.7%. And I have mentioned whenever this jump is more than 10% in either of these levels, that is significant. So I commented all those signals are bearish. So let's now look back on SPY chart. So microchip and all long positions I could exit on Thursday when my market view turned bearish. Now it's a good time to look back on the market ETFs to see how precisely at this point, when everybody was, or most of the people, except few people like me, were still bearish, I actually turned bullish at this point. Not heavily bullish because the market breadth from Q Global market breadth didn't give all clear bullish signal, but it was too oversold. So I mentioned in the last market recap that I was looking to buy, and right on Thursday I changed my market direction to bearish. Very precise, very accurate, isn't it? Now, important thing today is what is my preferred direction. Remember a while ago I mentioned about two candles having tails in opposite direction, side by side. We have that in SPY also. Where did we see it earlier? We saw it in UUP, dollar index ETF. SPY is also showing high level of indecision. So we are not sure, at least I am not sure. What does it mean? I am not sure. I am never sure, but I don't see any high probability chance of taking trade in either direction. Whether a trade will work out or not, I am not sure, but at least I have clarity in my mind through these analytics what is my preferred trading direction. But sometimes I don't have that clarity, like in case of SPY now. At this point I had clarity. On Thursday I had clarity that I wanted to short, but now after the market close on Friday, looking at the weekly two candles side by side, I am unclear, so I'll stand aside. Am I going to be bearish? No, because there is a trend line support. If I redraw the lines, it held for this week, it held for this week, it held for the current week. So for 3 weeks in a row, this trend line support in weekly is holding. I'm not going to short anything in SPY unless this is broken. At the same time, if it is broken, that will prove to be quite significant and I'll be happy to short again. Currently indecisive. What about QQQ? Why not I look at the market futures? Sometimes I don't have time in the market recaps to look at futures ETFs both, but I do look at futures and ETFs both for my own trading. So let's look at the futures for the rest of the market ETF slash futures. This is NQ, NDX future or QQQ future. Weekly again has the same pattern. 1 week with long lower tail, 1 week with long upper tail. That is very indecisive. Now, I mentioned earlier that I shorted QQQ using put options. One reason was from the market percentage chart, as I explained, that mega caps were suddenly reversing, that was favoring taking a short in QQQ. Another reason was actually here. I was also looking at that on another monitor, that NQ or QQQ came right to all these trend line resistances and it was reversing from there. That was a very low risk shorting opportunity, and that was another reason I shorted QQQ, not the other market ETFs. SPY, if you remember, did not have these trend line resistances. Now it is indecisive looking at the weekly two candles with long lower tail then long upper tail. Next, let's look at YM, Dow Jones Industrials Futures. Indecisive when we look at the two weekly candles side by side. This is for the third time we are seeing indecision, not able to decide my preferred trading direction. And for Russell 2000, let's look at IWM, because last market recap I looked at IWM and I made a comment. What comment did I make? See, I shared two long ideas or potential long ideas, one confirmed MCHP, one potential Netflix in the last market. Those were long, but at the same time I mentioned in the last market recap that if the market turned bearish, I like to short small cap because it was the weakest. Here I was bullish, but I also mentioned if the market turned bearish, I like to short IWM. And on Thursday it was very weak, the weakest of all, and then on Friday also it was very weak. So on Thursday, why I'm analyzing this is I'm showing on Thursday I could short IWM also, but I didn't. Why I didn't was because for IWM I could short it of course using fine-tuned chart, but I did not have support from a trend line resistance. Neither did I have support from the fact that the mega caps were falling sharply, reversing sharply. So I had those two in favor of shorting QQQ. That is why I shorted QQQ on Thursday using real-time charts, using naked put options. IWM I could short, but those were not in favor of it. In any case, in last market recap, I commented if the market turned down, I would like to short small caps. And if you look at the weekly candle, this is the most bearish weekly candle of the market ETF. So that analysis also turned out to be accurate. Now again, if I combine the two weekly candles side by side, one long lower tail, one long upper tail, that is showing too much indecision. I cannot decide on my preferred direction. However, I also see there is strong support at this level in weekly in this band. I have a bullish headwind in daily from where price went up enough to give a profitable swing trade. Now it is possible price will retest that level and give me a false downside breakout in daily, which will coincide with IWM finding support in weekly, and if that happens, I'll be happy to take long trades. See, when I looked at the other market indexes, I'm indecisive. When I'm looking at IWM, I am looking for buy setup provided I have this false downside breakout. And if this false downside breakout happens, price holds those support levels. We saw SPY also has weekly trend line support. Not only small caps can be bought, other stocks can also be bought. Let me go back to SPY. If IWM holds that watermark support in weekly daily, it is very likely that SPY will hold this weekly trend line support. It may try to give a false downside breakout, and that will be a time to buy non-small caps also. So currently I have no preferred trading direction, but as I mentioned also when looking at UP, I will like to have UP coming down, and I like to buy stocks because there are plenty of stocks, attractive fundamental stocks, even in relatively strong industries at a potential buy point. However, let's look at the global market also. We always do that. Let's look at them. Okay. Not that we are trading in the global markets, but it will show how the systems and techniques can be applied in any country, any market, so long as they are liquid. All ordinaries. It's in a no trading area. It has a resistance from trend line, support from watermark. It is somewhere in the middle. At the bottom, I'd like to buy. At the top, I'd like to short. In the middle, I stand aside. That is Australia. Let's look at topics, Japanese index. When it came to the weekly trend line support and daily trend line support, went up from there with a bull release, that was the time to buy, low risk buy point. Now it has already gone up from the swing low, not a point where I like to buy. Incidentally, now I look back and see the bearish headwind, the unique reversal signal caught the very top in both weekly daily. Beautiful in my jargon is profitable signal, and I take shorts when I have a proper setup using all the checklist conditions. At minimum, I protect profit in my long positions, as I would have done in this case also. That would be a wise decision. Now, I'm not going to buy, not going to short. China CSI 300 index. Yes, Chinese market is running no holiday period now. It is inside a triangle pattern, right at the tip of the triangle pattern. So when it is at the tip of the triangle pattern, I'm not going to short the top, not going to buy the bottom. That approach is valid when I am far from the tip. So if price came here to support, bounced up, I would like to buy. Price came to resistance far away from the tip of the triangle, came down, I'd like to short. At the tip of the triangle, that approach is not applicable. Instead, I'd like to look for a breakout in either direction and trade in that direction. Which direction will I prefer? Actually, when I look at weekly, both are okay. If the daily support is broken, weekly support will also break. That will be significant and that will be enough for me to take shorts. If the daily resistance is broken, that will mean the weekly support is holding. That is one of the strongest signals for buying. Longer term support and shorter term resistance breakout. So I am okay to trade in either direction depending on where the breakout happens in daily. Wait for the breakout to happen. UK's FTSE index in a range again in weekly, in a range in daily also. Right now I'll not like to trade. Once again, the bearish headwind here in daily, bearish headwind here in weekly got the very top. Now indecisive. India's Nifty 50, it is not in a downtrend, isn't it? It was the strongest of the global markets. Now also it is relatively strong. It's not downtrending. It is moving inside a box. When it is moving inside a box, I like to buy at the support, short at the top. Now it is in the middle. So what we saw, the global markets, none of them are giving a bullish signal or shorting signal. And if I look at the market breadth's global index, that is also moving inside a box. This is what I showed in the last market recap also. It was not downtrending, not uptrending. It was moving inside the box. Right now also it is moving inside the box. I mentioned in the last market recap that here it was time to buy at the support. Now it is in the middle. If we bought at the support, those would be profitable, but now I'm going to stand aside. So USA market is indecisive. India market is also indecisive, but for USA market, let's look at some other angles. Market level is very important for me. Look at the sector industry stock advanced decline breadth 1 month to 1 day. It is very red, predominantly red. Is it too oversold? No, not too oversold, especially Friday. The week is of course bearish. Friday is also bearish. Actually, all the pie graphs are bearish here. All of them from 1 month to 1 day across sector industry stock. So that is bearish. Is it too bearish? No. But if the market turns up from here, it is bearish enough to consider a oversold situation and buy. And we saw that would probably coincide with SPY finding trendline support, IWM finding watermark support. The bucket analysis shows that 69% of stocks in QH, that is S&P 1500 stocks, are below mid Bollinger Band. That is bearish. Is it too oversold? No. Percentage of stocks below lower Bollinger Band, 10.6%. Too oversold? No. So it may get more oversold, and I'll actually like that the market be more oversold and then give me a false downside breakout in SPY and IWM. So let me then also state that I may buy at support or I may buy at false breakout downside, false downside breakout. Which one do I prefer? I actually prefer false downside breakout, because that false breakout, in this case breakdown, will lead to two things. First, the long position holders, the weak hands, will exit, and then short traders will go in, which will be an oversold situation for me. So I will not short. likely, but others will short. And when it proves to be a false breakout, the shorts will have to cover, and I will like to buy at that point. And that is why I prefer to buy looking at the current market situation. I'll hope that it will give me a down move and then reverse up, regain the support in SPY IWM. At that point, I like to buy. Will I buy if Monday I have a buy setup? Yes, I'll do that also. I have enough reason because enough fundamentally strong stocks are at a lucrative buy point. I may look at some of them. But QH is not showing me enough oversold situation. So I have no buy signal from there and no short signal. It has already been down for a while. What about technical breadth from Q Finder? The weekly technical breadth, if we look at all setups, very indecisive. Reversals are more bullish. So that is a bit in favor of taking reversal trades. But the weekly headwind reversals on the bullish side, they are not above the threshold point of 1%, only at 0.4%. So maybe little bit in favor of taking reversal trades, but not enough. So weekly technical breadth is not telling us to take trades in either direction. Indecisive, just like we saw from the market ETFs and market futures and also in QH. If I look at the daily technical breadth, in fact, looking at all setups, it is very bearish. 77% are bearish. Strengths are also bearish. Continuation very bearish. But here I have reversals like weekly more bullish than bearish, and I also have the headwinds hitting the threshold point on the bullish side. So when I combine weekly daily, there is a case for looking for reversal setups, specifically headwind reversal setups. That is how I use the technical breadth graphs. And if you are watching my YouTube recaps, you know that sometimes when I am indecisive from all the other angles of Q analysis, the technical breadth may help me break the tie. So far, that is the case this week. I am in favor of taking reversal bullish trades. What kind of reversal? Specifically headwind reversal trades. But I'll have to find 360-degree trades on the long side, and I may tell you upfront that is not a easy thing to find in today's market. I looked at several of these headwind signals, didn't find a perfect setup. There may be some candidates, but as of Friday's close, I didn't find a single perfect bullish headwind setup from this relatively large number of 41 stocks. That is 360-degree trades. I didn't actually find, not perfect ones, but I look at two of them. Before that, I am yet to look at another market angle, that is the very useful Q Global market breadth. Extremely useful for me, aka profitable for me to decide prefer trading direction first before trading, and this Q Global market breadth plays a major role. Looking back, here it was overbought thanks to Mr. Ian Woodward, may him rest in peace, series of Bango. Hindenburg warning, Hindenburg confirmation, time to short. Hindenburg confirmation again, time to short. Series of bingo, that is sell off everything, even those of value, or throw the baby out with the bathwater. Time to look for buy setup. This is when I mentioned that I was going to buy more confidently if I see either a large accumulation count or an Eureka signal. None of them came. Market went up little bit, and at that time I did share some long ideas. I took some of them, I exited them with a profit. But Thursday we had a small distribution count, not large enough to be significant. One is not significant, but we did not have the accumulation count or Eureka signal that I waited for before buying with more conviction. That didn't happen. However, I could buy at the bottom, and that was because of this percentage of stocks above 50 MA hit the extreme oversold threshold, and 3-month new high low hit the extreme oversold level. Those were indicators, including the bingo irrational selling signals that I used to buy at the very bottom. But now I didn't see the follow through signal, Eureka signal or large accumulation count, so I am not going to buy it right now. But the only thing that is telling me that I could look for some buy candidates, maybe not buy, but look for buy candidates, is the reversal signals in Q Finder and the fact that many fundamentally strong stocks are very much down. Now let's use then Q Finder to look for some possible headwind bullish setups. As I mentioned, I didn't find any perfect setup, but let's look at two. I may consider buying them next week if the market goes up, or at least these two stocks go up along with their industries. These are the bullish setups. I'm interested in the headwind setups, flag for them 41. I'll not look at all of them, but this is the workflow I followed. I started with technical breadth, so that is bottom up, starting with technical analysis or technical setups first. The two stocks that were finally of interest to me, one was Kellogg, and another one was CLX. These two. Notice what I mentioned earlier. There are plenty of stocks of great fundamentals, robust stocks, well-known stocks at low price levels. We can see that visually. Both Kellogg, and CLX, Clorox, are at price extreme low. At price extreme low, they gave the unique headwind reversal setup in daily, but we have to apply the checklist conditions on weekly also. I look at the charts. Out of these two, Kellogg also has an indecision cluster. So it came down, showed indecision at the bottom, bullish indecision, and then gave the bullish headwind signal at price extreme low. And for Clorox, didn't have any indecision, but at price extreme low pattern, it gave a bullish headwind signal. Let's look at these two stocks. Look at them one by one. Kellogg first. Click the chart icon to open it, and I am going to look at it using weekly, daily, both. That is the at a glance template. Several technical indicators are in favor of buying the stocks, but we don't have a clear setup. What are the indicators? We have a cluster of bullish indecision. This long lower tail created a watermark support that was tested. A false downside breakout happened. What did I mention just now? If I have to choose between a support and a false downside breakout, I'll choose the false downside breakout candidate. On Friday, it also gave a bullish headwind signal with a bullish candle, but Friday's market wasn't bullish, isn't it? So this stock bucked the trend and went up on Friday. Was it a strong up move? Yes, it was a big move, 3 up move. That is the parent of all bullish momentum signals. You can see on the screen length there was not a single big move up 3, and that came not only at price extreme low but jump thrust low. As I have seen and explained earlier, this hardly ever fails. I am hesitating, always I say this. I am hesitating to say it never fails, because in trading anything can fail, but when at price extreme low and then jump thrust low, so already at low price level it was running down further sharply. Not only running down further, it was running down with acceleration to the downside. Somebody or some group stepped in, bought a lot. Not people like me. We don't like to buy to stop a vigorous downtrend, vigorous down move at price extreme low. retail traders, not me exactly, but retail like to panic and come out at the very bottom. And then somebody bought a lot, not people like me. Am I going to buy? We have many signals in daily. Daily have a headwind setup, but weekly does not meet the headwind setup conditions. We don't have a bullish candle, or there is a or condition on weekly for headwind setup. Don't have a bullish candle shape or yellow color. None of them are true. So this is a stock I like to buy, probably using fine-tuned chart if it goes up, and I will even more like for it to come down first. I like IWM to come down, create a false downside breakout. I like SPY to come down, test the trend line support in weekly, then go up. And I like Kellogg also to come down a little bit and go up again. It may make another false downside breakout at the watermark. That is one case. I like to buy right when it regains support, or it may create a higher low and go up. I like to buy here. A third case is if it goes up from here on Monday, then also I may be willing to buy using fine-tuned precision entry chart, because using daily weekly I don't have a confirmed setup. That does not stop me from attempting a very low risk entry using the precision entry chart. Now before actually I buy the stock, I would like to confirm its industry strength and fundamental score so that I have a truly high probability trade. Let's use Cube Vital to check the stock's fundamentals. And as you can guess, I already mentioned there are plenty of fundamental stocks at lucrative, that is price extreme low buy points. Kellogg must be one of them. Yes, but when waiting for the peer stocks to come up, let's look at its industry relative score. Beautiful. From QH, instantly we can look up Friday's industry strength, one of the top 20%. Friday's acceleration, one of the top 20%. Even better, even over 2 days, even over 5 days, it is accelerating as an industry. And see how weak it was for how long. QH beautifully captures these turnaround candidates at the industry level. Packaged foods and meats industry, and on Friday when the market was down, this industry was up by 1.5%. So industry is telling all clear, go ahead and buy as a turnaround industry. What about the fundamentals? Not here. I go to the fundamental scorecard. Okay, there was a server error from Refinitiv. That's okay. I can still look at the individual stock scorecard. Undervalued stock. That is enough for me to consider buying. I may buy either based on valuation or based on earnings growth. Here I don't have high earnings growth. We don't expect a lot of high earnings growth stocks in food processing industry or in consumer staple sector. So that's fine. However, I also note it has an accelerating earnings growth from quarter to quarter. So that is also a reason to buy. I have two reasons to buy: valuation and increasing earnings growth, but that is not all. I notice dividend yield is also significant, not very high, but again it is a packaged food industry stock. 4.8% dividend yield is significant for me at least. So we have three reasons to consider buying the stocks in terms of fundamentals. Industry is strong, and technically daily is telling it's ready to buy, but I am hesitant looking at weekly. I will buy either using precision entry chart next week, real-time chart, 5-minute chart in the morning session, 10 minutes if it is in the afternoon session, or I may wait for another false downside breakout, especially if the market is also going down next week in the first few days of the week. So Kellogg was one stock I kept an eye on, and I already showed there was another stock. Let me close all the charts. By the way, the technical analysis, as you can see, can be done on Metastock, but it could also be done on TradeStation. So if you're TradeStation, I go to Finder. Let me remove all these stocks. put Kellogg on Finder on TradeStation. Last time I looked at Finder on Metastock. TradeStation will also show the same headwind setup on Friday for Kellogg. That will also show in real time. The other stock was Clorox, CLX. That will also show a headwind setup on Friday. Let's look at Clorox charts, and we may use the technical charts on TradeStation and Metastock both. Weekly bullish headwind. It also found support at the watermark that was created by this long lower tail candle, which also had an indecision cluster. I always say one indecision is important, cluster is even more significant, but it is not a trade setup. Wait for a trade setup. Daily is meeting all the checklist conditions for headwind setup. And here also we can see it is at price extreme low, at jump thrust low. It does not have big move 3 up, extreme bullish momentum, but that is fine. The extreme bullish momentum is not a necessary condition for headwind setup. Daily is meeting all the checklist conditions. In addition, it is at lucrative buy point in terms of price level. It was coming down sharply on Friday. It bucked the trend and went up. But weekly is still not meeting the checklist conditions. That is, weekly candle shape is neither bullish nor is it in yellow color. That's why on Friday at the close I wouldn't buy any of these stocks. But here I also have another thing in support of the stocks technically, that is the long term weekly trend line support. If it can go above the support level, it closed slightly below the weekly trend line support. If it goes little bit up, it will regain support. That will be great for me. As I mentioned, I'll find a false downside breakout. So all these people that exited with very high volume, those weak hands would be stopped out and market may come up again. This stock may go. In fact, when everybody has sold, when nobody is left to sell, maybe that is the time it will start to go up, but I'll wait for the proper signal. It may also find support at the watermark after some time. That will be even better. So I may take an initial position. See, first I may take an initial position using precision entry chart 5 minutes, not exactly daily, but precision entry 5 minute chart next week. Then if it finds support at the weekly, I may add to that. If it finds support at the watermark in weekly, I may add to that. On the other hand, after I make a precision entry using 5 minute chart next week, if I do that, if it comes down, I'll stop out very quickly. So technically Clorox also does not have a proper trade setup, but have enough signals for me to get ready to buy. What about its 360 degrees analysis? Let's do that like we did for Kellogg. CLX takes only a few clicks, few minutes. I always look at the 360 degrees analysis before deciding to buy or short. While it is retrieving data about peers, I again look up the industry score. Once again, instantly we can see now it is a different industry, household products, one of the top 20% in strength over 1 day as well as 2 day. 1 day is enough for me actually, but it has additional strength. Earlier it was weaker, not as weak as Kellogg's industry, but it was weaker, and we see there is acceleration over 2 days. Top 20% accelerating industries over 2 days. On Friday, when the market was down, this industry was up 1.6%. So industry is telling I'm clear to buy. If I go to the stock scorecard, that was relative industry score from age, and here I see in itself also 91% of stocks went up in Clorox industry. That's very strong in itself. Here valuation is medium. I cannot decide to buy based on valuation, but earnings growth is very high in the last quarter and it is accelerating. So here I am buying based on earnings growth. For Kellogg, the buy decision in terms of fundamentals was based on both valuation as well as increasing earnings growth. And here the other reason is also there, decent dividend yield 3.9%. So I have found two buy candidates, possible buy candidates, not confirmed setup as of Friday, but two possible candidates that I may consider buying if they go up. And the stocks are at very low price. Let's look back on the stocks. At a very low price level, isn't it? Fell sharply. And that shows a unique way I trade, and Q allows us to trade. And if you are following me, you know the trades are quite significant enough, high probability trades, whether they are trend following or reversal. The probability of success is the same, which is very high in fact. So I'm happy to buy a stock that is downtrending if I have a proper setup. That is a case for Clorox. And sharply down, isn't it? Primary direction for swing trading is based on daily. Daily is sharply down on the right hand side, and Kellogg, K for Kellogg, also sharply down in daily. So I'm happy to buy provided they are provided. Now, why I came back to these two stocks, both are in consumer staples sector. That is a very defensive sector. We all have to eat. Use the cleaning products from Clorox, have to eat probably Kellogg products. And when consumer staple stocks I am finding to buy, that is not saying very bullish story about the market overall. However, having said that, not only these two stocks, there are plenty of other stocks in technology industry and all sorts of industries at a lucrative buy point. In fact, even the stocks that were oversold, they fell last week. If I go back to IWM, again, I'm looking at the forest and looking at the trees at the same time. IWM was the weakest of the market ETFs this week, but IWM was also probably the weakest over this period, long period in weekly chart. So stocks that were at a low price level already, many of them small cap, they fell further. It is not easy to find shorting candidates that are at a lucrative short level. Certainly not easy to find shorts at price extreme high. And when I see that in terms of technical analysis, my inclination is actually to buy. When I don't find lucrative short opportunities, tendency is to look for buy setups at low price level, and I found these two stocks. But again, they are in consumer staples sector. That is not very bullish for the market. So I have that in mind as well. Let me end today's session with that thought. Thanks a lot for attending. By the way, it is not very bullish for the market. But one thing I mentioned earlier, I think I should mention that again before closing, that if UUP turns down, the dollar index turns down, not only these two stocks, there will be plenty of other stocks to look for buying at lucrative buy points. And that will be the thought with which I like to close today's session. Thanks a lot for attending. I look forward to seeing you in my next session, most likely next weekend. Usually I have it on Saturday. This time I'm doing it on Sunday because I had a short road trip during the week. Was not home yesterday, came back yesterday night and having the session today. Anyway, look forward to seeing you next week in the weekend session. Have a great weekend, and as I always say, as all these live analysis show, there is no reason not to do that, trade profitably. Thank you.